When it comes to buying a home in Canada, question arises what income documents you need to get approved for a mortgage. So today we are going to specifically talk about the income documents you need to get approved. Buying a home is a huge milestone, but before you can get the keys to your dream house, you need to secure a mortgage. And to do that, you need to prove to lenders that you can afford to pay it back. This is where income documents come in. In this video, I'll uncover different income document requirements if you are employed, self-employed, or retired, and will also answer a common question: can your income still be considered if you or your spouse is on maternity leave? So watch till the end to get this answer. But before jumping onto that, let's see why income documents are so important. Let's break it down. So first and foremost, income documents provide proof of your income stability. Lenders need to see that you have a steady and reliable source of income. Next, income documents help demonstrate your financial responsibility. Tax returns, for example, show your earning history and your ability to manage your finances over time. Income documents also verify your ability to repay the loan. Lenders want to see that you have enough income to cover your mortgage payments along with your other financial obligations. Now that you have known what importance your income documents hold for a lender, let's now start with their requirements as per occupation. So broadly, there can be three categories, that is employed, self-employed, and retired. If you are employed, so one of the common myths is if you need to get approved for a mortgage, you need to have 2 years of employment record, which is not true. It's not mandatory to have 2 years of job record. It means that you can still be eligible if you have just recently moved to a new employer. So in this case, full employment income will be considered for the mortgage application, but you just need to take one thing into consideration, that you should not be under probation. So what documents you would be required in this case to prove your income? The first is your recent pay stub. And the second is, since you are not having the last 2 years of record with the employer, the letter of employer is something that you can get from your employer. And on the basis of that, a lender can get you approved for a mortgage. A common scenario is where you are having a fixed salaried job, but along with that, you are also getting an yearly bonus. So what happens in this case? So in that case, if you are more than 2 years employed with the same employer, bank takes into consideration the average of last 2 years of your income. So what documents in that case would be required? Normally, it would be last 2 years of T4 general, or the notice of assessment would be required. So let's understand this with an example. Suppose in 2022, your T4 general with the same employer was $85,000, but in 2023, your T4 general increased up to $90,000. So how much income your lender is going to take? It will take the average of the last 2 years, which is $87,500. So let's talk about if you are self-employed. If you are having your business, then the lenders have specific requirements from you. What the requirements are? They need at least 2 years of continuation of your business. That is must. Why that is? Because that business is uncertain and it's full of ups and downs. So bank has to see the growth of your business and what the track record of your business has been for the last 2 years to ascertain your income. Most of the times banks take into consideration last 2 years of average of your income. There can be some exceptions as well. Now let's have a look what documents you need if you are self-employed. So first thing you require is the last 2 years of notice of assessment along with your full T1 generals. The second thing that you need is certificate of incorporation if you have formed an incorporation. So there can be different type of business structures starting from sole proprietorship, partnership, and then incorporation. The next thing is the bank statements. The bank might ask for your personal statements along with your business account statements. And the last can be your T2 corporation income tax return. So this is applicable if you have formed an incorporation and you have filed the taxes for the previous years. So one thing that comes out to be after this discussion is that don't switch your occupation from employed to self-employed when you are planning to buy a home or when you are planning to refinance your home. Because if you have switched from employed to being a self-employed, then bank requires a history of 2 years. So that can delay your decision to buy. So next scenario is when somebody is retired. So somebody who is already retired, he or she might still be looking to buy a new home by selling the previous one, or they might be looking to refinance their existing home. So in that case, what income can be taken by the lender to make them eligible? The one thing that can be taken is the monthly pension. So the person might be receiving the pension from the previous employer on a monthly basis. That can be considered as their income. The next is their monthly government benefits. like Canada Pension Plan and Old Age Security, which they receive on the monthly basis, form part of their income as well. So what documents would be required? In this case, we would be requiring 3 months of the bank statement showing the credit happening in their account on the monthly basis or whatever the frequency is. The next is the notice of assessment for the last year. That is the document requirement we have. So let's talk about some specific scenarios. So the first one is if you have kids. So when you have kids, you receive the monthly CCB, that is Canada Child Benefit. By any chance, if you are not getting eligible for the mortgage on the basis of your income, the lender can take this monthly benefit as part of your annual income to make you eligible for the mortgage. So what document will be required in that case? One is the 3 bank statement showing that you are getting that credit on the monthly basis, or you can provide the annual benefit statement which you receive from the CRA on the annual basis. Normally it's in the month of July each year you receive how much entitlement you have for the Canada Child Care Benefit. The next scenario is if you or your spouse is on maternity leave and meanwhile you have planned to buy a home or refinance your mortgage. So what will happen in this case? So the answer is the full income of yours or your spouse will be considered for this mortgage application. What documents will be required to support that? One is the T4 general from the same employer for the previous year, and the other important document would be required is the letter of employment from the same employer mentioning the annual salary, the date you joined that employer, and the date you will be returning back to the work with the same employer. So if you have these 2 documents, the lender will be considering your full annual income for the mortgage application. I hope you find this video helpful to understand the requirement of the documents for getting approved for a mortgage. Subscribe to this channel for more insightful videos in the future. Thank you.